Today, we are delighted to announce the launch of Kartesia's latest strategic initiative in the European credit space, expanding into large-cap corporate credit. Kartesia Loan Management, or KLM. In this video, we want to explain why Kartesia is launching a CLO platform, why we believe we are uniquely positioned to do so, and how we plan to develop our strategy. The European CLO market has experienced strong annual growth rates over the past several years, with attractive performance leading to continued expansion in institutional investor interest. This in turn has improved market depth and liquidity, fueling positive momentum in the asset class. With banks continuing to face strict capital requirements and private capital standing as a robust and growing financing space for corporates, CLOs remain very well placed to step into that funding gap and provide much needed capital to the continent. Capital markets in general still only provide a small proportion of corporate financing when compared to the US, implying significant room for growth. That being said, we do think market conditions in the next few years will lead to a dispersion in performance, with superior credit selection and active portfolio rotation required to maintain returns. In short, we think this is a credit picker's market. This leads us to why Kartesia. We have spent over a decade building an award-winning pan-European credit platform with deep expertise in underwriting leveraged credit across cycles. What differentiates us further is our intimacy with the European LBO market and our proprietary data advantage. With more than 50 leveraged credit professionals spread across 9 offices on the continent, we have reviewed thousands of credit opportunities across Europe. Through our in-house Plural AI platform, that knowledge is structured and accessible, allowing our CLO team to benefit from the full depth of Kartesia's investment experience. By leveraging our proprietary data and broader investment platform, we can make more informed decisions and identify key risks earlier. Secondly, we have been active CLO equity investors for 13 years, deploying over 400 million euros across nearly 100 transactions. That experience has given us a strong understanding of the asset class, the market structure, and the key drivers of performance. And then finally, this is combined with strong institutional backing via our partnership with Candriam and New York Life Investment Management. This financial stability is what has allowed us to add a dedicated 7-person CLO team from the onset, and has been instrumental in allowing us to already raise more than 130 million euros in CLO equity capital. Together, these elements create a platform that is both experienced and scalable.
While recent market turbulence has muted Q1 leveraged loan issuance, sponsors increasingly remain under pressure to deploy dry powder and exit long-held assets. The resulting resurgence in M&A is expected to be the primary driver of loan issuance moving forward, with the repricing wave that has been dominant in recent years somewhat exhausted. While default rates remain low, we continue to see signals of increasing default risk, perhaps most prevalent in the downgrade to upgrade ratio and the percentage of loans trading at a meaningful discount despite wider spread tightening. That said, as a whole, the secondary market remains well bid with limited price dispersion within upper rating cohorts. Again, we believe this lack of risk premia for weaker names within cohorts allows for outperformance through disciplined credit selection. By sector, cyclicals remain under pressure with no meaningful inflection, be it commoditized chemicals, building materials, industrials, or discretionary consumer. We naturally remain cautious on software, whereby AI's commoditization of code continues to upend the sector, with a value shift towards proprietary data. While we see pockets of underperformance in certain regions for sectors heavily dependent on government spending, overall we observe broad resilience across healthcare, pharmaceuticals, and education. Finally, we remain constructive on consumer staples, commercial services, and the infrastructure services, the latter exhibiting notable tailwinds from data center expansion, the energy transition, and a general reversal in decades of infrastructure underinvestment. Alongside a 7-person dedicated CLO team, we've invested in best-in-class CLO infrastructure and credit intelligence while leveraging Plural AI as the backbone throughout our investment process. Portfolio construction is underpinned by robust bottom-up underwriting, fully leveraging input from the wider Kartesia platform and a seasoned perspective of senior leadership. This integrated approach provides local market insights that set our view beyond generally available information. Guided by our sector views, our portfolio positioning reflects a defensive posture with low tail risk. Lastly, an active approach to portfolio management supports downside risk mitigation, expression of thematic overlays, and relative value optimization. Kartesia Loan Management is a natural evolution of our platform at the crossroads of multiple competencies mastered by Kartesia for more than a decade, building upon the firm's core knowledge base to expand into complementary strategies. This is a platform with institutional backing, a proven CLO equity track record, and long-standing and intricate knowledge of the European LBO landscape. We are convinced that this will further catalyse our entire organisation and expand our investor base's access to a broader share of the European credit markets.